guys, it's Stock Curry, and I've got great news coming out of China. I've also got an update for you on the Fed meeting, an update on the infrastructure bill, an update on earnings, an update on the pandemic, and 18 stock picks for you. So let's get into it. Okay, first up, I've got huge news coming out of China. The FUD is gone. China just announced that they will still allow IPOs in the United States. That dispels all of the fears that have been beating down Chinese stocks over the past few weeks. US listed Chinese stocks are about to skyrocket. If you want to take advantage of this, I recommend buying some Chinese stocks when the markets open on Thursday. Thursday should be a huge green day for Chinese stocks. Also, the Fed spoke on Wednesday and they said that they were not too concerned about the Delta variant. They said that they don't have any plans to change their current timelines on cutting back on bond buying or raising interest rates. And since the Fed stance was unchanged, that is exactly what the markets needed to rise up. And we saw the markets rise up quite a bit today. I also have great news concerning the infrastructure bill. The Senate voted to debate on the infrastructure bill today. Now, I know it's crazy, but here in the United States, our government actually has to vote on whether or not to even discuss an upcoming law. It's wild. But the good news is they did vote to go ahead and discuss it, so now the infrastructure bill is one step closer to getting passed. Okay, now regarding earnings, Facebook beat on earnings, but after warning of a significant slowdown in growth, the stock fell over 3% after hours. That's pretty much what all large cap stocks have been doing. They've been beating earnings and yet the stock price has been going down. It just reiterates that the market is overvalued and due for a pullback. Now, for an update on the pandemic, we have cities, states, and countries that are starting to close down again, and certain companies and municipalities are starting to require masks again. This is leading to confirmation of fears that new shutdowns are starting to happen. Now, if more and more places start to shut down, that's obviously going to be bad for the economy, and in turn, that's going to be bad for stocks. Okay, like I said, I've got 18 stock picks for you guys today, so let's get into it. For those of you who are new to this channel, my name is Stock Curry. I used to work as an analyst for some large investment banks, and now I analyze stock picks from the top YouTubers. Every day I watch hours of videos and then I combine all of the top stock picks into a single video. I give you both the cliff notes on all of the stock picks as well as my analysis on their stock picks. Now, if anything I talk about today piques your interest, make sure you listen to who I say talked about that stock and then go watch their video to get the full details on what they said. Now, all I ask for putting all of this together for you guys is that you hit that like button, subscribe, and follow the page so that you can get notified when I release my next video. In fact, I'll give you 5 seconds to do that right now. Alright, before we get into today's stock picks, I just want to remind everyone that I am not a financial advisor. Nothing I talk about today is a recommendation to buy, sell, or hold. These are just my opinions, which may or may not be accurate. Please do your own research before investing in any assets. Now, if you're wondering what you're looking at right now, this is the Webull desktop app. Webull is the app that I use for my trading, and it is also the app that I use in all of my videos. If you'd like to get 2 free stocks worth up to $2,300, you can sign up for Webull using my link in the description below. When you sign up using my link in the description below and deposit just $100, Webull is going to send you 2 free stocks worth up to $2,300. All right, let's get into today's stock picks. And first up is AMC. This is AMC Movie Theaters. Chris Zane said AMC would make a great day trading stock, but I completely disagree. AMC does not follow the technicals at all. The only thing I would do with AMC is buy and hold. Next up is BABA. This is Alibaba. They're the Chinese version of Amazon. StockMo thinks BABA will be okay in the long run. He thinks this will be a leader amongst Chinese stocks, but it has gotten beaten down recently, and buying in now would be like trying to catch a falling knife. So StockMo thinks it's best to dollar cost average into Chinese stocks right now. That will give you exposure to some great Chinese stocks such as BABA, while at the same time reducing your risk if the stock continues to fall. The other thing I would add is that if you're going to invest in Chinese stocks right now, I would avoid playing any options. I would just do what StockMo suggested and dollar cost average in. Next up is BIDU. This is BIDU. and they're a Chinese internet search company, similar to Google. StockMo listed BIDU as one of the best Chinese stocks to buy right now. What's interesting is that the last time we talked about BIDU 2.5 months ago, I gave you a $190 stop loss price. And this is a great example of why you want to set a stop loss price on your trades. That stop loss would have saved you quite a bit of money. So now that BIDU has fallen a lot in the past few months, is now the time to buy in? Well, I will tell you that fundamentally, BIDU is by far the best Chinese stock you can own. Not only is BIDU profitable, the forward PE ratio is only 17.91, and that's for a tech company. Most tech companies have a forward PE ratio closer to 100. So I'm not surprised to see the average analyst price target at $304.43. That represents an 82% upside from Wednesday's closing price. Now technically, BIDU is risky. It was oversold on Tuesday and did rebound on Wednesday, but it's hard to tell if it'll continue dropping or start going back up. So while I love BIDU for a long-term hold, I would dollar cost average in so that you can limit your risk if BIDU continues to drop in the short term. Next up is BNGO. This is Bio-Nanogenomics. Keenan Grace is short-term bearish on BNGO. I disagree though. The MACD histogram is rising and it's about to form a golden cross. All of the other technicals are neutral. So BNGO will either trade flat or go up, but I don't think it's going to go down. Next up is CAT. This is Caterpillar. The traveling trader likes CAT as a potential beneficiary of the infrastructure bill the Democrats are trying to pass. CATA found support at the 200-day EMA and the technicals are now bullish. I agree with the traveling trader that CAT would make a good long-term hold. This is also a dividend stock with a 2.1% dividend yield. Next up is CHPT. This is ChargePoint. They're the largest charging station company in North America with 73% of the total market share. They're also starting to expand globally. The traveling trader thinks CHPT will do well once Democrats pass the infrastructure bill. Technically, CHPT is very bullish right now. I'd like CHPT for both a short-term trade as well as a long-term hold. Next up is CRSR. This is Corsair Gaming. They're a hardware manufacturer for computer-based gaming and gaming streaming. Jeremy with Financial Education said CRSR is a steal at current prices. He said it would even be a good deal at $40 a share, but at $29 a share, CRSR is a steal. The forward PE ratio is all the way down to 16.17. That is extremely low for a company with the insane revenue and profit growth that CRSR is seeing. CRSR is right at the 300-day EMA. The RSI bounced off of oversold and is now rising. The MACD is rising as well. This stock looks like it has bottomed out and is starting to go back up. You might never see CRSR this low ever again. Jeremy with Financial Education is buying CRSR, and I'm seriously thinking about doing the same. Next up is DKNG. This is DraftKings. They're an online sports betting company. Chris Zane likes DKNG at the current price and gave us a $70 price target. Now, I had previously given you a $56 stop loss price on DKNG. Even now, I'm not entirely convinced that DKNG is ready to start going back up. We've seen DKNG rise back up to the 50 or 100-day EMA and get rejected multiple times. I personally just feel like DKNG is too risky to buy back in for a short-term trade. As a long-term hold, however, I like the idea of dollar cost averaging in. I do currently hold an option on DKNG, but it's a little bit of a longer term and doesn't expire until October. So that just shows you that while I like DKNG as a long-term hold, I'm unsure of what it's going to do in the short term. Next up is FCX. This is Freeport-McMoRan. They're an American mining company. The traveling trader liked FCX better at the 200-day EMA, but it's still a good buy at current prices. FCX should do well once Democrats pass the infrastructure bill. Next up is JD.com. StockMo showed us how JD is down about 40% from highs. He likes JD for a long-term hold, but it's not the best Chinese stock to own. JD struggled with revenues last quarter and their profits tanked. So JD has a little bit more risk than other Chinese stocks StockMo mentioned. Next up is LCID. This is Lucid Group, and they're an American EV manufacturer. This was formerly under SPAC symbol CCIV. Keena Grace likes the fact that most large institutions who are invested in LCID are buying more shares. Only a few are selling. Technically, LCID is bullish despite the pullback over the past 2 days. I do expect LCID to rise slowly over time. I wouldn't trade this, but I do like LCID as a long-term hold. Next up is NIO. This is NIO, and they're a Chinese EV manufacturer. Stockmo said NIO just got caught up in all of the China FUD. He still thinks NIO is one of the best Chinese stocks to buy right now. Chris Zane said the same thing, and I agree also. The technicals are all very neutral right now, so I have no idea if NIO will go up or down from here. If you're thinking about buying NIO, I would dollar cost average in. Next up is NUE. This is Nucor, and they're an American steel manufacturer. The traveling trader liked NUE better at the 100-day EMA, but still thinks it will do well once the infrastructure bill is passed. NUE is very bullish technically, and I think this would make a good short-term momentum play as well as a long-term hold. If you want to play NUE short-term, then I would set a price target at $107 or $108, since that is the level of resistance for NUE. I do think your chances are good at making a quick 7 or 8% profit on this play over the next week or two. You could also do a 2-week option, buying a call option for the August 13th deadline if you don't mind the extra risk. Just keep in mind that if you do buy an option, then you could easily lose your entire investment if this play does not work out. Next up is TME. This is Tencent Music Entertainment. They're a Chinese streaming music service. Stockmo likes TME because it has been severely beat down and the forward PE ratio is all the way down to 26. The RSI is very oversold and the MACD is rising. So it does look like TME might start bottoming out and start going back up soon. The lowest TME has ever been was $9.23, and TME has grown revenue since then while remaining profitable. I think TME is probably one of the least riskiest Chinese stocks to own due to the fact that they are consistently profitable quarter after quarter. This is a Chinese stock, so it doesn't come without risks, but if you have a long-term outlook, then TME could be a great stock to own. Assuming all of this China FUD blows over, and I do believe it has, this stock could easily double in a very short period of time. I think the upside potential is much higher than the downside potential with TME. I really like the stock at this price, and I will be buying TME as soon as the pre-markets open. Next up is TSLA. This is Tesla, and they're an American EV manufacturer. Tom Nash took some time to analyze Tesla's Q2 earnings. If you're interested in a deep dive in the Tesla Q2 earnings, then I recommend you go watch Tom Nash's video that he uploaded Wednesday. Next up is WYNN. This is Wynn Resorts. They're an upscale international hotel and casino chain. Jeremy with financial education likes WYNN as a long-term hold. WYNN has been getting crushed lately as the Delta variant has been expanding across the globe, and people are fearful that more shutdowns will hurt hotels. WYNN is now oversold and seems to have found support at around $100. I would personally be very comfortable buying WYNN here. And if we zoom out, we can see the WYNN hit the same $100 level support back in January before bouncing again. That was back when the pandemic cases were spiking and were much higher than they are today. And the MACD at negative 5.45 has not been this low since the crash in March of 2020. I really feel like this is an overcorrection, and Jeremy with financial education thinks so too. Jeremy gave a $120 buy-under price and a $100 ideal buy-in price on WYNN. If you want to know more about why Jeremy with financial education likes WYNN, you can go watch his video that he uploaded Wednesday. Next up is YUMC. This is Yum Holdings. They're an American fast food chain operating in China. Their brands include Taco Bell, KFC, Pizza Hut, and others. Stockmo loves YUMC for the long term. YUMC has been growing rapidly in China with revenues up 45% year over year last quarter. They are also profitable. The forward PE ratio is 30.85, which is still a little bit high for a fast food chain. I don't like YUMC as much as Stockmo does, but I do agree that it would make a good long-term hold. I would be more comfortable buying YUMC closer to the 300-day EMA at around $58 than at the current price, but I don't know if it will drop that low. If it does drop down to $58 though, then I would rate YUMC a buy. But at the current price, I would just rate it a hold. StockMo said he would be loading up on YUMC soon, so it sounds like StockMo is waiting for the price to drop some more also. Alright, I hope you enjoyed this video and got a lot out of it. Comment down below what your favorite stock pick is. And if you're looking for a broker to trade with, you can sign up for Webull using my link in the description below. When you sign up using my link in the description below and deposit just $100, Webull's going to send you 2 free stocks worth up to $2,300. And if you're not a US resident, or if you're looking to trade OTC penny stocks, then I recommend Interactive Brokers. Interactive Brokers is a great broker. They have highly discounted trading, and I do have material connections with both Webull and Interactive Brokers. So when you sign up for either one of those, not only are you getting a great broker to trade with, you're also helping me to continue to produce these great videos for you. Now, finally, I want to remind you to hit that like button, subscribe, and follow the page if you haven't already. I hope you have a lot of success trading, and I will see you tomorrow.